Hi there, welcome to GrainTV. I'm Kevin McNew. It's Monday, April 25th. We had an up day in grains. Let's take a look at the grain hedge trading platform and see where we closed. In Chicago, corn up 5 1/4. Beans closing just below $10 a bushel on front month May, and wheat was up 4 1/4. We were much higher for most of the day, or at least the first half of the trade session today, but we closed off of those highs, well off of those highs in the case of beans. Beans finishing the day up 12, had been up as much as 32 on front month May. So we had a big sort of correction as we got into the mid part of the trade session today. Some of the news out today continues to be supportive for lower prices. In particular, rains that had been plaguing Argentina are now moving into Brazil. Brazil is expected to see the southwest 2/3 of its corn crop, the second season corn crop, get some rain in the coming week. Meanwhile, Argentina is expected to dry out, and that will improve the harvest progress that they have been slow to get going, and hopefully, at least for them, improve their production situation. Other news out today, China said that they would be exporting corn in the coming marketing years. In 2016, they expect to be exporting about 1.7 million metric tons of corn, and in the year after that, 2017, up to 2.3 million metric tons. So keep in mind this Chinese policy that came out a month ago, where they stopped subsidizing Chinese corn farmers to grow corn, and to basically let the free market dictate the corn price on their 250 million metric ton stocks, is really going to start to take shape in the coming years. You know, that is going to change what they have been importing. They haven't been importing much corn, but they have been importing feedstocks because of the high corn prices in China. So we saw a lot of distillers grain from the U.S. move there. We saw a lot of milo from the U.S. move there, and those inventories will now be used to replenish or to replace those exports that were once coming from the U.S. You know, let's take a look at November soybeans. We talked about this on Friday. As we've reached these pretty high levels we certainly didn't expect a month ago, and if you go back to where most farmers have their crop insurance tied, it's substantially below where we are today. November beans trading last at $9.95, although the official settlement was somewhere around $9.97. Still $1 a bushel above the insurance price of $8.85 that was established in February based on November futures average. In addition, you can still lock in a floor well above the insured price, getting a floor if you were to buy a 960 put. Somewhere today it was trading as low as 30 cents a bushel, probably closing around 40 cents a bushel today. That puts a floor using a 960 put somewhere around 920, again well above where we were just a month and a half ago, before all this rally got taken or started to take shape. Let's look at today's trade action. I found it to be very interesting because it was very one-sided to start the trade session in the morning. We came into this morning session. The overnight session was fairly choppy to lower. In fact, there didn't seem to be much enthusiasm for buying, but once we had that opening bell ring at 8:30 Central Time, we saw nothing but higher prices for the better part of 2 hours of trade. This 5-minute bar chart showing the launch higher. We were trading around 979 going into the morning session, but we quickly, in the course of about 2 hours, got up into that 1010, 1013 range. But once we got there, that's where the bulls stopped their buying program, and we started to see some back off, and then you saw in the last 30 minutes of trade a real big sell-off, getting us down, like I said, last trade at 995, the official settlement around 997. So do I think this market's got, substantial upside? Probably not. We had a hard time holding these rallies today. If we'd have held these rallies going into the close, then I would be more optimistic about more price upside. But right now, with the market selling off, it seems unlikely that we can muster much enthusiasm with the fundamentals pointing to drier weather in Argentina and better rains in Brazil. If you are interested in learning how you can market your crop through Grain Hedge and use futures and options, give us a call at 877-472-4607 or visit us online at grainhedge.com to learn how to take a free demo of our trading platform and get our weekly or our daily commentary. Silver right now is at historically low levels. Starting with the financial crisis of '08, silver prices made an epic run from $10 an ounce to $50 an ounce in just 3 years. Silver looks poised to make another run higher. Here's why. Today's headlines show wide-scale economic risk, central banks using negative interest rates to stimulate economic growth, and the continued explosion of government debt around the world. All these factors are creating a flight to safety in physical metals. On the fundamental side, high mining costs limits new silver supplies, while demand for silver continues to expand through rapid use in cell phones, plasma TVs, and batteries. All these factors suggest taking action at today's prices before silver reaches $25 an ounce. Our precious metals desk at Grain Hedge can educate you about investing in physical metals. Their goal is to put the most amount of silver and gold in your hands at the least cost. To get started, contact Rodney at grainhedge.com or by phone at 877-472-4607.